Fourth quarter earnings season unofficially kicks off this week with a dozen banks and asset managers in the S&P 500 slated to report. Not only did the U.S. economy not take a sudden turn south last quarter, but it's actually been doing quite well. Third quarter GDP grew more than 4% annualized, and more solid growth is anticipated in Q4, though probably not quite as strong. And remember, that's in real terms, inflation adjusted. So add 3% or so to inflation to get a rough approximation of the attractive revenue opportunity. Corporate America delivered more than 8% revenue growth in the third quarter of 2025, and in our view should be able to do that again in Q4, more than enough to extend the double-digit earnings growth streak now at 4 quarters. Two other reasons to be confident. First, AI investment, which is expected to drive most of the earnings growth for the quarter, isn't slowing down. And second, the average level of the U.S. dollar index was down more than 5% from the year-ago quarter, which boosted earnings generated in foreign currencies by U.S. multinationals operating abroad. One potential earnings headwind, though, which has been with us for a couple of quarters now, is the additional cost of tariffs. The company has done such a spectacular job managing tariffs thus far, which has expanded margins over the last 4 quarters, that this should not be particularly worrisome. The overall effective tariff rate is not expected to move much from the 10 to 11% range it's been in over the last 3 months. If you have any questions about the stock market or your investments, contact us today at Oxroad Capital.